Hey, thanks for tuning in. So in this video, I'm going to talk about invoice lending versus an AR line of credit and what's better for your business. There's some similarities between both of these, but there are some differences. And by the end of this video, you'll understand which one's going to be better for you and your business. So stay tuned. Hey, so my name is Joe Cambrato. I'm the CEO, founder of National Business Capital. I've helped business owners just like you secure over $2 billion, actually approaching $3 billion. Me and my team love working with entrepreneurs. Like many businesses, if you're growing and you're growing fast, you probably have some cash flow challenges, and you're probably watching this video because you're looking to explore some of the different options. It's really challenging to find good information on a lot of different financing products. It can get really confusing because there's all these fancy terms that the bankers like to use and business owners just don't understand. You're probably great at your business, but didn't get a master in finance. Here's a few things to understand. Invoice factoring. Typically, most lenders that do factoring, they're called factoring lenders, where you can pick and choose your account receivable invoices that you want to factor. Now, you can only factor B2B account receivables. So if you're selling direct to consumer and you have a receivable from a consumer, you can't factor those. So if you're selling to companies like Target, Walmart, or other big B2B companies, usually those receivables can be factored. If they're not progress billing. If there's progress billing, it's very limited on the type of lenders that will do that stuff. But most factoring companies will allow you to pick and choose the invoices that you want to finance. So basically you sell them that finance, they buy it from you, and you usually get 80 to 90% of that invoice up front, and then they'll charge you a monthly fee until that invoice is repaid. That's typically anywhere from 1% to 2% a month, and sometimes there'll be some fees or additional fees in there per invoice as well. Now, some factors want you to factor all of the receivables with you. So every time you get an invoice, they want you to factor it. So it's very important that you ask the lender that you're working with, can you spot factor or pick and choose the invoices that you want to factor, or do you have to do all or none? Super important to understand that. So an AR line of credit. Now, this is where things get a little muddy because a lot of factoring companies will refer to as an AR line of credit. The lender is going to want to basically take ownership of all your account receivables. They're going to want all of those account receivables usually to flow into a lockbox. Don't be scared of this. It's basically a dual bank account that you share with the lending party, but that account can be in your name. So your clients can still write checks to that lockbox account. And when they pay your invoices, it'll all go into a new bank account. So you'll just notify them, hey, I got a new bank account, pay everything going forward into this account. So essentially, when it's a true revolving AR line of credit, all of your receivables will flow into that account. And based on how many receivables you have, you can usually borrow up to 80 to 90% of that as a line of credit. So as an example, if you have $1 million in account receivables outstanding at any given time, depending on the terms that you get with the lender, you'll have $800,000 to $900,000 available that you can write checks on. You can have them wire you the funds, but you can basically draw down that money as you need it to fuel your business, your operations, cash flow. The AR line of credit, you will usually take a little bit more work to get set up, and there's a little bit more underwriting that's involved, but it really ebbs and flows like a line of credit. Now, if you start with $1 million in receivables, if you increase that to $2 million or $3 million, you're growing your business, usually your AR line of credit will increase with it. It's also really important if you're in growth mode to ask both lenders whether you're going to go the invoice financing route or invoice factoring route or the AR line of credit route. You want to ask both of those lenders, what's their maximum funding size that they can go up to? Because if you're in growth mode and you start with a lender at $1 million and they cap out at $2 million or $5 million, very quickly you're going to cap out with that lender if you're in growth mode. And if you're using both of these facilities, there's essentially advances on your future accounts receivables that you already have coming due. The beauty of both of these products is as you book and grow those account receivables, that line grows, so you have the money there to support and service the working capital needs and the cash flow needs of the business. But the real way to use these financing products as tools is to make sure you're getting competitive rates but also to make sure that you're going out and booking more and more business. Because if you just use one of these lenders and you kind of stay the same status quo, then you're really just advancing your future sales that you'd already have and paying interest. You want to use these products and really lenders as like financing tools to get your company to that next level. And what that means is you can go out there and have the confidence to know that you've got a financing partner that can scale and grow, which is with as much business as you can go book. So the real key difference is invoice financing, invoice factoring, one-off invoices typically. If you move to the AR line of credit, it'll be all of your invoices in order to give you that flexibility of a line of credit. And typically, if you're gonna finance all of those invoices, usually you can work out a better rate, and the lenders will be more flexible because they wanna know that they're able to lend a bigger and greater amount of money versus like the spottiness of just factoring one-off receivables. Along with that volume, if you're going the AR line of credit route, you usually can get some better terms and better pricing. If you'd like to explore your financing options, if you'd like to understand if this product can make sense for you or explore other options that may make sense, check out in the info below. There's a link to get connected with me and my team, and we're happy to help talk through and see which financing option may make sense for you and your business. All right, thank you very much for tuning in. If you liked the video, please make sure you like, subscribe, drop a comment below. I love seeing those comments. And most importantly, keep doing what you're doing. Keep growing your business.